Let's first get our financial wealth in place.
Well, we do have that in place. We have wealth management startup Dezerv that was launched in 2021 by former IIFL wealth executives. Mumbai-based Dezerv wants to make investment affordable for all. It creates personalized multi-asset portfolios for investors with a minimum ticket size of 50,000 rupees, particularly targeting senior working professionals. Sandeep Jethwani, who's the co-founder of Dezerv, is here with us to tell us what the startup is doing to help individuals along their wealth creation journey and more. Sandeep, first of all, a very happy Dhanteras to you, and thank you very much for your time here on CNBC-TV18. You know, for a country like India, where the bulk of wealth is concentrated in the hands of just a few, and wealth management is seen as something only HNIs would have, what are you doing at Dezerv to make investment affordable for all, and what is your investment philosophy?
Ritu, good to meet you again, and happy Dhanteras. In the spirit of Diwali cheer, I think we all have to focus on how we should create wealth, grow our wealth. You're right about the fact that a certain segment of India continues to get wealthier. To our mind, I think one of the things that we have been helping our investors do, which are affluent Indians, is they should be able to review their portfolios very clearly. One of the things we have discovered as we built Wealth Monitor is that we have 25,000 crores of assets which have got reviewed on the platform, with nearly 1,300 crores of what we call missed gains, which is underperformance relative to the market. We've been helping investors identify what are the causes of this underperformance in their portfolio and how can they enhance returns for their portfolio across asset classes, starting from equities, fixed income, multi-asset, and private opportunities. We think it's an exciting time to be an investor in India, and we are on the lookout for a lot of opportunities.
Well, an exciting time it is because retail investor participation is at an all-time high. Tell us about the kind of trends you're seeing in the market when it comes to, say, first-time investors. Is the average age of investors also getting lower? What is the preferred investment or asset class?
So, Ritu, there are multiple factors which are coming together when it comes to investor behavior. The first is that a larger part of their asset pool or inflow of income is getting allocated towards financial assets. Within that too, a larger part is going towards equity or growth assets. You referred to it earlier. We are now at $2 billion of monthly flows into equity mutual funds just on account of SIPs. And then there are a whole host of other investments that are leading into the equity markets. So I think that is one trend we are seeing very consistently. In terms of even the sort of more mature investor, they are looking at sort of more innovative options when it comes to their portfolios. They're looking at portfolio management schemes. They're looking at alternative investment funds. So there's a lot of interest and appetite to evaluate innovative, differentiated opportunities when it comes to their wealth. I think the one thing that investors are also seeking is more nuance when it comes to their portfolios. I think there was a time when investors were looking at very simple allocations, buy and hold, invest and forget. I think some of that is moving towards a more active management, a more constant oversight on portfolios is what we are what investors are expecting from wealth managers like us.
You know, Sandeep, young or mature, Diwali often marks a time for reflection and goal setting for all kinds of investors. Let's say you had to give advice to someone who wants to invest their savings in these brackets. What would your advice be? Say 5,000 monthly savings, 50,000 monthly savings, 10 lakhs, or even 1 crore?
Ritu, at the very highest level, asset allocation is what drives return. So let me just focus on that. In India, we are at the confluence of three very positive factors when it comes to the situation we are in. The first is that the overall macro is looking very, very good. We are among the, or if not the fastest growing, largest economy in the world. Government debt to GDP is around 80% odd. In terms of the micro, also the corporate earnings growth is very robust. We are seeing corporate balance sheets look better than they have in the last couple of decades. And the third is the domestic flows which are coming into equity markets, which are reducing reliance on global flows. And in that context, therefore, having a solid equity allocation to the portfolio for somebody who's oriented towards wealth creation is almost necessary. Within that, in the next year, we are looking forward to having a larger exposure to large caps. In our portfolios, we have trimmed down exposure to small and mid caps. Large caps are now nearly 2/3 of our allocation. Even fixed income is looking very exciting, by the way. So if you look at the fact that core inflation is down, global flows on account of inclusion, the JP Morgan index are looking very strong. Corporate earnings we already referred to. We are seeing good quality bonds available in the range of 8 to 12%. So that's again a meaningful part of the portfolio. So these are two broad buckets that we are focused on. In terms of gold, we would maintain some allocations for purposes of diversification. But large cap equities and fixed income is the message that I'd like to leave the viewers with.
Okay, Sandeep, very little time left. Quickly, you talk about micros and macros looking better, and we're also seeing a lot of IPOs hitting the market, including from new age companies. Is IPO investing for all? What are the risks or, sort of minimum disposable income to be considered if one is looking to invest in public offerings?
So, Ritu, I think one thing that I'd caution investors against is thematic investing or investing behind trends, right? We would rather investors allocate their money to diversified portfolios or to fund managers who will diversify the portfolios on their behalf. While some of the IPOs in the near term might look exciting, it's more important to take a broader holistic view of the portfolio and do allocations from that perspective. Having said that, I think in an overall sense, new paper hitting the market is very, very good. We are in a time where the kind of demand for high quality assets, courtesy of domestic flows, is very, very strong. And great companies, such as some of the ones which have listed in the recent times, I think it's a great opportunity for investors to diversify portfolios.
Sandeep, thank you so much for your time here on CNBC TV18. It was a pleasure speaking to you, and a very happy Diwali to you from all of us.
Thank you, Ritu. Wishing you and all the viewers.
Okay, on that note...